Barratt joins in from the ETO Group to talk about exactly that. Jonathan, hi, morning. Firstly, want to understand what's leading to this big crack in metals.
Yeah, look, I guess it's not really that surprising. I guess with Donald Trump coming in and perhaps also Elon Musk sort of having a bit of go as well, the US dollar's gone bid. And I think it really is all about the US dollar at the moment when it comes to the commodities. That inverse relationship is certainly hurting a lot of the things that we adhere to, like the price of the precious metal markets and also the base metal markets.
Right, good morning to you, Jonathan. Cheryl also joining in the conversation. Like you said, that there is a dollar strength as well that is actually kind of weighing heavy on these commodity prices. But let's talk about gold, because 2 weeks ago, the only thing that we were talking about is gold surpassing fresh record highs day after day. Yep. Where do you see gold headed right now? Do you think that it will actually get a sheen back now when you enter the new calendar year?
Yeah, look, I think it will. But at the moment, it is all about the dollar. Now, the US dollar index is trading around that 106.50. Now, that's on critical technical resistance on the top side. And if it breaks through that area, then it's all about the US dollar. Now, I guess the concern that we do hold is the market remains very long in our precious metal sector. And if people are sort of just looking to go straight to the US dollars, that's going to make a bit of a fallout for gold. I did think that gold around this level was good support, but we broke through and we're breaking through it at the moment as we speak. So I think there's more downside in there, but there is still a risk in the market. So I'd be looking for a low and then trying to get back into the position, getting back into a long position. But at the moment, I think you've got to be on the sidelines or short because I think there's more in on the downside.
Jonathan, I don't know if you've gone through the latest World Bank projection, because that's quite interesting, especially on crude. While they're saying that metals and agriculture are going to sort of stabilize after this knee-jerk reaction that they're seeing, it's actually oil prices, which they anticipate is going to decline quite a fair bit. About $80 per barrel for 2024 and then drop all the way to 73 next year.
Look, I think it's very hard to put that sort of projection in play. But one thing we do know is at the moment production is up, and we also know that Donald Trump is going to be sort of, having his shoulder to the pump there and continuing to frack. So I get a sense that the US is going to keep on producing. They are the #1 producer at the moment in the world, and whilst we're seeing that supply without a pickup in economic activity, then I think oil prices do remain on the soft side. We did have a bounce last night, and I think we're at intermediate support, but I think down the track that we will see it lower. Now, I think that's also to press that China's economy and see what sort of stimulus packages come out. Remember, China is an importer, and we like to see demand coming through from China, but we're still seeing problems with the economy there. And I think whilst the problems there and economic activity remain soft, so will the demand for oil. So that to me is a bit of a concern. So that really just look at the economics of China. If it still remains weak, then I think oil prices will be coming lower, which obviously is a godsend for those people, those countries, particularly India, that needs to import the commodity.
I just wanted to understand your outlook coming in for copper, because China's copper smelters are looking to cut the output next year. We've seen a sharp correction as well in copper prices. Where do you see all of these metals, which are very crucial when you talk about the industrial space?
Yeah, I mean, I've always liked copper at the moment. I mean, it's the environment's not right to actually buy it at the moment, as we know that. But I do think with that EV space, that the demand for copper will remain. Remember, we can flip very quickly into a deficit, but it really is about that economy, the economic activity, and when that picks up. I do like the driving force that we're seeing out of China for copper, and I think that should help to hold up prices for not too much of a severe drop. I mean, when we look at inventories, the inventories are okay, but they are picking up. That is a bit of a concern. But once again, I think it's more to do with where the US dollar is and what the US dollar is doing that'll dictate that for the time being.
Jonathan, so great to chat with you. Thank you so much for your time today.
No problems. Have a good day.
Okay.
If you like this video, then like, share and subscribe to ET Now.